Good morning and welcome to Equity Story Trade Watch, the 19th of April, Wednesday, of course. And I'm here with Claude. So welcome, Claude. We are going to talk about today, a question I posed to Claude was, tell me a story that you think is going to report well, or at least update well this quarterly, because of course we're in a quarterly season right now. We're just ramping up and we're expecting a lot of quarterlies to come out over the next 2 or 3 weeks. Well, actually 2 weeks. So yeah, look, I'm going to ask you the question later. Before I do that, first of all, just Equity Story disclaimer in front of you. Everything we talk about is in general nature only. So any stock we talk about is based on technicals under fundamentals only. Okay, so moving on, I'm looking to what happened to last night in the US, which is actually fairly flat, not much movement at all. I'm looking at some of the earnings that come out because, again, in America, the start of the earnings seasons started. And I'm just looking at Bank of America beat both earnings, so that's a good plus. I'm looking at Goldman Sachs, posted a double miss on that, so that wasn't great. Netflix released its earnings after hours, slight miss and earnings beat. New subscribers was up 0.3%, but flopped minus 13% in after hours. So we'll be seeing to see how it actually goes. It's wild. Saying that, flat, there's some earnings. We can't do anything about that. We're going to now focus back to our markets here. So I'm going to flip back to us right now. And let's have a look at this. And hopefully you can see the screen right now. So announcements this morning, before we go on to our thought of the week. I'm going to go through maybe 3 or 4 stocks. So let's start with VUL. So I'm just going to switch to the charting so you guys can see where we're at. But I just want to mention some of these stories because, you know, maybe they're tradable, maybe they had a good story behind them. So we just want to see where they're at right now. And VUL hasn't been our favorite story, but it has been tradable from time to time. But recently it's below trend, so we're not that interesting. But just as an update for you guys out there, where are they now? And they are still working on the financing. So they're, you know, ticking boxes. I still think they're going to get caught out and not quite get there because it's not going to be easy. They need a lot of moving parts. The actual capex is almost $3 billion, right, to develop this. I know they needed a lot of help. Maybe they can get some government help as well. But like I said, because it's such a big amount of money, so many moving parts to this, I think it's going to be difficult to get this up and running. So for me, I'm not a non-believer. And charting wise, I think the chart's telling you they're also non-believers at the moment. So pass for me. Next story on the line is AMP. They've come up with a little update themselves. Another dog that really hasn't performed very well. It had a little bit of a movement recently, thinking that it's back on again, but no, it isn't. So for me, that's still really untouchable and not something I'd probably be investing into. I saw CMM come up with an update. This is a gold story that's actually pretty good. They've got one operating mine, Kalawinda, and one they want to develop. So that's going to be 2 mines if they can get the second one up and running. So that was an update on the second mine that looks quite positive. So potentially, again, a very tradable story, potentially something that could grow as well. So one to watch and one to trade with the gold prices. So not bad there. I also had a quick look at Pole. So I know we've been looking at some interesting companies in the mining space that, you know, potentially can add something to us. And look, they had a huge jump from what, 26 cents to 46 cents this week. This is on the back of them acquiring the old Endeavour mine in New South Wales. Now, I remember Endeavour mine back in the day. It's been around since the 70s. It's been, I think, on care and maintenance for some time. But it seems like polymetals have picked it up on a cheap. And if they can restart it successfully, they could actually make some money on this. So, you know, one to watch. And I know it's had a jump, but again, probably a bit too early for me. I just want to see how it all sort of settles down before I'm get into it and have a look at it again. But watch listed, and we'll come back to it maybe in a week, 2, 3, 4 weeks time. It just depends to see how the chart's looking and more announcements. So I just want to see exactly what they can actually update this us further. All right, the next one, and I know you asked me to have a look at that as well, Claude, and that's EGL and Environmental Group. We've actually got this in our portfolio on the fund, Equity Story Fund. So I'm interested to hear your thoughts, but I like this story, and they had an acquisition yesterday, which we didn't talk about because it came out right after our talk, but it looks decent. It looks like they're going to add, it's going to be accretive of about 50% in FY24. So from that point of view, possibly some value making here, acquisition, and it's capital raising to go with that at 20 cents, which again looks pretty decent because not much of a discount to the 21-cent price. So what are your thoughts, Claude? Have you got anything that you can add to this?
Well, I do find the general theme these guys are going for, which is, I guess environmental cleanup, clear, like getting out. I think PFAS is one of their technologies. Perhaps you're probably again across the tech better than I am, but I like that thematic, and that sort of kept it on the periphery. The last couple of years, I guess I've considered them a little bit subscale, but I do know, now they're profitable, and in the first half year they made 0.44 cents per share. So not completely insane now if you just see a little bit of operating leverage come through, and you might actually have a decent business here. So yeah, it's like it has been a little bit early stage for me and a little bit subscale with say half year revenues, gross profits I should say, because it's quite low gross margins, of just say like 8.3 million, and that was up from 6.8 before. But this acquisition that's come out yesterday does actually make me look at it a little bit differently. Obviously, there's a bit of a risk with the integration and that side of things, but it could, I imagine after the integration at least, it could well, increase gross margins a little bit, or at least operating leverage on the net profit or the profit before tax line. So that scale is probably a good thing. They have shown, some degree of profitability. So definitely an interesting little microcap, basically, is how I look at it. And I'm also wondering, is this acquisition raise, is it going to be an opportunity to actually buy in, because it might be a bit of a point of change. So it's good to hear that you're positive about the acquisition there. Although I guess there's always risk with these things if you don't know if they'll actually perform as hoped.
Yeah. Now look, I think I probably concur with your words here that I like the space, the environmental space. I think it's something that I've always been looking to see if I can find an investment in. It is a micro cap, so it's going to be fairly high risk. The margins are going to be probably pretty low, and one slip up and they can really go downhill. So we're going to be watching that. But they've done a pretty good job over the last maybe 12 to 18 months of getting this business into profitability, like you said, albeit small. And this acquisition looks decent on paper, and even there we're a little bit. If you look through that presentation and their talk, they still probably weren't exactly 100% sure if there's going to be any synergy out of there, right? Because it is a little bit different space they were doing, but there could be some cross-selling opportunities and so on. So look, overall, I think they need scale. So that's what they're obviously adding as well. And if they can execute well on this, I think definitely it's going to look as a better company overall. And I think that's probably going to be an ongoing thematic here for these guys. Apart from winning contracts, probably small bolt-on acquisition like this is going to be quite pivotal in their growth passage. So look, I'm positive on this company for sure, but with the understanding that it is going to be high risk, volatile, lightly traded as well. But with the possibility that it could do quite well. This is sort of reminds me of the Duratec of the world, right, Claude, where Duratec had a pretty tough time of it. Then they got on a roll, and look at it, they're flying at the moment. And I'm sort of hoping that we can see EGL in a similar type of vein, where if they really play the cards right, execute well, they could get on a roll and really come up with a pretty good run, share price run. So this is what I'm sort of looking at.
I think that there's a lot to be said for the fact that they've now, I think it's at least 3 halves of profitability in a row. The fact that they've been able to get the discipline to be profitable at that smaller scale. FY22, I'm looking at it, said 1.6 million NPAT, doesn't have a full tax rate at the moment though, so perhaps EBIT's a better way to look at it. But even so, EBIT was 3 million, and I think then it was something like 2 and a bit in the first half, 2.2 million in the first half. You are seeing, I'd say, some discipline to make a profit at the current scale. So therefore, I would hope that as they, if they continue to grow, and if they can continue to grow, then the profitability will increase. And even if they just have a good run of it for 2 or 3 years, you could definitely see them making, who knows, like, $3, $4, $5 million profit, at which point, the current market cap would look probably way too cheap. But you still do need that to happen. So that's the risk, I guess.
Yeah, absolutely agree. And look, and again, I think you made a very valid point there that the management seems to be focusing on the bottom line. They don't want to see losses on the thing. So,
it's good because, for many reasons, but not least because, if they continue to just like not super impress, but just remain profitable, then they're going to stay in it. They're going to get longer. Perhaps the share price will stay a little bit flat, could drift down, could go up a bit, but if we actually do see operating leverage kick through, which sometimes does happen with these kind of businesses, then we'll be in a good position.
Yep. Okay. So look, it will be interesting when they open up, post this acquisition, at what price they open up, because like I said, 20 cents is the capital raising price with acquisitions. So fingers crossed. Like I said, fingers crossed for me, but fingers crossed for you who isn't in, and maybe you can get a chance to pick this up if you like the story. Around the 20-cent mark, which would be nice. All right. Let's move on to our thought of the week. Claude, Ants, I'm going to let you go first, and that is with which company is going to report well that possibly could see a positive reaction from the investment fraternity. Give me your story, please.
Well, I'm very hesitant to try and predict the short-term share price moves on the quarterlies. It's not necessarily a game I would generally play. But I do think it has occurred to me that one that might have a strong quarter would be a little software company called Mach7. Now, these guys kind of actually operate in a somewhat similar space to Pro Medicus, except they have a very different sort of pitch. It's more of a cheaper software, more competitive on price, and I guess lower margins, and also more license sales, so not so much ongoing transactional revenue, but actually instead just like lumpy license sales. And these guys signed their biggest ever multi-year contract worth 16.7 million in they announced it on the 3rd of January. I think it was signed on the 30th of December. And yeah, basically they say 7.5 million is expected to be recognized in FY 2023. And I'm not sure exactly how much cash they will be getting in the next quarter from that. But I think that there's a good chance that they will have a strong contribution there if they're doing implementation work, etc. And if there's going to be a license component, that I hope that as well. But if that's what happens, if they sign it on the 30th of December, just the meaning of banking and everything over New Year's means that they're not going to be getting the money until this quarter, even if they got paid something straight away. So I would be hopeful, definitely, that these guys are going to have a really pretty strong quarter next quarter. Now, they have said they're going to have a much stronger second half, so that could fall in, that could fall in the first quarter or the second quarter of the second half. But that would be my guess, is that it probably is going to be a good quarter next quarter. And also backing that up, I just had a look at the historicals. Typically speaking, these guys, their strongest quarters are the quarters to March and June, and some years the March quarter has been stronger, and some years the June quarter has been stronger. Typically the September quarter is their worst quarter. So vague level of seasonality there. And I just think that there's a decent chance this year it's going to be the March quarter that's the strongest. If it is, it can look like a big uptick. And also, this company itself, it's not too bad. It's kind of not that great either, but the problem is it's not profitable. And really you would hope at this scale that it would be profitable. But one big thing to keep in mind is that they've been a bit of an acquisition by a growth by acquisition story, a bit of a roll up. They bought a big, the eViewer software, which is, is part of their modular offering, and they've been amortizing that away, which is a bit of a non-cash expense there. So, arguably you could say that, on a cash basis, their results are a little bit better than what they show at the moment, which is a small loss before income tax of 1.2 million in the last half. And yeah, so a decent one. I like it. Don't own it myself, but I think it could have a strong quarter. And I probably wouldn't want to be if I was just a private trader, it'd be some kind of speculation I might do, but I probably won't start building a long-term position just because I think it's going to have a strong quarter next quarter.
Okay, look, I'm just looking at the charts, which is quite interesting. It's not trending, but there is some, like, last 3 or 4 weeks, a build up towards the quarterly. So potentially there's something about that, what you're telling us is happening, right? Which is a pretty strong quarter. And it might see that break through those resistances and get back over that 72 like they did back in January when they had that quarterly, right? So it could see a sort of similar type scenario.
It could. I'd be more. Look, if I saw insider buying in this company, then I would reckon that would probably, if there was some sort of good track record of the insiders, the board and all that those kind of crew, them actually buying shares, then I would be a little bit more optimistic. Right. It's just that I don't see that. Some founders still own shares, so it's not all bad.
Right. Look, again, I like the company. It's just, you just need to be patient to get into it as a trade. And if you are,
it's a weird one because it's been cobbled together. So there are lots of different shareholders. And I think the original company had already that was backed or listed Max 7 that had a very wide shareholder base. There was no single. So I said their original founders still own some shares. Actually, I'm not sure about that. I can't remember. It's hard to actually pin down who the original founders are. I've spoke to, some of the people that founded parts of the business, but because it's cobbled together, it's all sort of spread a bit thinly there and a bit of a loose trader.
Okay. Well, I'm watching this with interest because, like I said, if it gets over those resistances there, then maybe there's some merit to see it go up from 64 to 70 something. We're watching it. I like it. So thanks for that. I'm going to talk about Meta Group. Look, I'm intrigued because I don't think they are bound to come up with a quarterly, but I am expecting some sort of an update. And I think we're coming up at a good time to actually have a look at this as a potential buy for a trade or maybe even a long term. And the reasons why, and I think, first of all, the CEO bought a little bit of shares in March at 396 on market. So that was one thing that sort of caught my eye, that he was buying a little bit, but it's what happened in January and February and March that gets me excited about it. So I'll show you. So obviously the chart looks pretty good. No problems there, but I'll quickly show you with Meta Group why I think they're going to report pretty well. So first of all, in February, they reported very, very well. They've actually had an upgrade during that time. And I want to show you the actual presentation. Whoops, get rid of that. Presentation that was done in March. Just to give you an idea why I think they're going to report pretty well. And the growth for me came from, the US. And this is why, for me, they should report fairly well, is it was very, very strong. And you don't see that very often when a company, from Australia goes to the US, straight away they become very successful rolling out their services or products, right? It just doesn't happen very, very often. It is a very tough market to crack. Usually you got to spend a lot of time, but they've hit the ground on it incredibly well. And they've actually, starting to grab some market share out of there. Even though it's small, they're coming off obviously a zero base. It is already growing very, very quickly out there. And the market, if you look at compared to Australia, it's actually, I think, 4 times as big, right? So the possibilities of Meta Group is quite significant. They are targeting that 1 billion in revenues. I think they're already talking about 580 million. That was their last update. So let me just have a quick look. Where is this presentation? Here we go. So I will quickly show you why I'm sort of thinking they should report well. And there's your presentation. Obviously, the net of the title is building the first billion. That's the $1 billion looking at revenues, right? So there you go. This is the guidance, FY23 guidance here. 580 million, I think they talked about. So that's what we like. What we do, I mean, you could go through that yourself, but what I'm talking about is, in the growth phase, the margins are still fairly stable. Returns are still pretty good. They are targeting a lot of different sectors: energy, transport, logistics, and so on, and diversity globally. Like I said, this is the key for me. The North American market is the key because it's a big market, much bigger than Asia or Africa. So this is why the focus has been going on. And if you look at it, the 10-year CAG is 30%, which is obviously pretty good. If you just keep going down all the way down, like I said, this is like 8.8 billion, and this is 2.2. So it's about 4 times as large possible market for them to have a look at. They've got all these three. If you go through all these slides, it just show you the scale that is possible for Matter Group. And we're only at the beginning of it, I think, because they've only entered the market in the US 12 months ago. So from there, it's potentially, and it's very fragmented. If you have a look at it, it is incredibly fragmented. So they can quickly ramp up and come up with some really incredible growth there. And the beauty about it for me, Claude, at the end of the day, it's all organic. They're just rolling up the brand name, selling themselves of what they do, and it's looking pretty bloody good. I'm really excited about this company. We've been in it since $2.60, $2.50. So we're sitting pretty at the moment, but I still think it's not too late to get in and possibly keep at it on bad weeks, bad months, get into this company because it's very well run. You've got the actual people that set up the company still there, and having a big say at where this company is running. So for me, skin in the game, everything points to a good company in the future. Claude, do you like this company? Do you think this is going to be okay?
I do. I owned it. I sold it in terms of cleaning up my portfolio, but I'm looking to add it back in. So I pretty much agree with everything you said. Look, I've spoke to a lot of people. The biggest risk I can see for these guys is that there's a recession and that slows down demand, and that could well happen. It could really hurt them with debt and stuff like that, because they do have taken on debt to grow, of course. So I think that's a risk. I wouldn't. When I'm hoping to buy. I'm working on when I should try and buy, what price I should pay, and thinking of that. But it's on my list of companies I'd like to get in my portfolio. And it's just about it, trying to finish off my process and decide, how much I want to get in that. Like, one approach I'd take is I think it's probably a good long-term company, but quite cyclical. So one way to play it I could potentially been thinking about having a smaller position, and then if things do get rough, and it'd be one that I'd sort of be willing to hold through the cycle, or would I be trying to this is the big question I'm trying to decide, right? What's my thesis here? Is it this is a high quality company, founders still involved, basically, got a good runway. It's quite expensive PE, trailing PE, but if that growth is slated to come through, and if that does come through as expected, then it's kind of growing into its valuation there. And in that case, what is my thesis here? This is the key question for me. Do I want to have this as a long-term thing that I accumulate and look to have as a 5-year hold or a 10-year hold or something like that? Or is this more one that I'm trying to say, okay, the momentum's good now. We're not, there's fears of recession. We've had the curve inversion, the bond yield inversion, right? That's usually going to say there's going to be a recession coming up, basically. And that's not guaranteed, of course, but should I be just saying, all right, I'm going to trade it until the recession starts coming through, and then when things start to get really soft and if we start having a market sell-off, because the market, could suddenly just get focused on that, and then stuff will get sold off. Do I want to be waiting for that situation? And if I buy now, do I just hold through that bumpy ride or do I get out? These are the questions I'm trying to get a thesis around. I think there's a lot going for Meta Group, but that, I want to have a plan as well. How am I going to be seeing this one?
Yeah, look, I 100% agree. I think the biggest risk is recession in the US, which could potentially crimp growth for sure. So, it could, of course, affect the company share price, whatever, right? So I completely understand that. I'm taking the risk on here that, look, they're going to still do okay in a recession. They might have a period of weakness. I completely understand that. So I'm just going to, play the charts and play the company how it is. But again, this is going to be a long-term investment for me. I could see significant growth out of this over a long period of time with, a few ups and downs with the recessions, whatever. But yeah, I really just like the strategy and the way they've done their growth. It's just, for me, one of the incredible success stories we've had here. And like I said, I don't see it very often because I've been looking at a lot of companies going in the US, going in Europe, failing miserably, coming back to Australia with their tails between the legs. And these guys seem to be pulling the right things, pulling the right strings and doing it well. So I'm intrigued. And like I said, the market is 4 times as big here as in Australia. So potentially that's where I see the big growth. And if they can get to this $1 billion target of theirs, right, aspirational target of $1 billion in revenues, and if you extrapolate the profits out of there, say double that from 37 million, I think they talked about, to 60, 70 million, then you've got a company that's really very attractive for me in a short term, right? So I like it. I think it's doable. And 100% I'm with you on the risks here, but I'm going to take that risk on.
What percent chance do you think there will be a recession anyway? Like it wouldn't be 100% chance, would it? Or
no, it wouldn't be. But you know what?
Eventually 100%, but like, I mean, in the next kind of year or so.
Look, I think it's a high risk because of the interest rates going up, and that there's talk that Fed still wants to move up the interest rates higher. So look, there is a definite chance there, but is it going to be catastrophic? No, I don't think so. And is it going to be a prolonged? Possibly not again. So look, like I said, at this stage, I'm looking at it. Yeah, there might be a mild recession, and I'm happy to take it on because they are sort of maintenance people, right? So they're going to still be.
It's not like as soon as exploration goes and then they completely stop. It's like a lot of it has to do with just the ongoing running of a mine.
Yeah, exactly. Or even if they're on care and maintenance, they still have to go and maintain these sort of stuff. So, for me, I still think it's going to be a fairly decent proposition, even in a recession type environment.
Cool.
All right. Thank you very much for joining me. Thank you for the idea of M7T and my Meta Group. So let's hope that they deliver good updates.
Yeah.
And we don't have eggs on our faces, but I think we'll be okay. Again, Claude, thank you so much for joining me. Have a great day. And again, I'll probably see you tomorrow or the next day. Thanks, guys. Enjoy your day.
Thanks for the chat, Peter. Have a good one.
Cheers.